What is up, traders? My name is Heath and this is Trade Talk. If you are new to the channel, welcome. If you are not, welcome back. Before we get started, I must ask if you could please just smash the like button. That would be fantastic. Also, if you haven't subscribed, make sure you do so, as I put out pretty good content and it's worth a sub. So Bitcoin has had a beautiful momentous move from around the yearly open. The yearly opens price on the Coinbase data feed is $28,990. This price, the yearly open, was breached with a wick from the June 22nd candle. Once this occurred, Bitcoin's range-bound price action was cut down from a range of about 10K down to a range of price about 4K, so more than half. This tightening of price is very boring and tiresome to trade. In a choppy market condition, it is hard to trade because price will simply not respect important areas like open, high, low, and closes of previous candles, therefore making entries almost impossible because your stops will most likely be hit before catching any range-bound trading opportunities. It simply isn't a good time for experienced traders to enter into new positions. Now, when the June 22nd's open was breached by July 16th's close, we were watching to see if price would become a bear trap, and it didn't. For a week, it offered up a sell-side position down to the yearly open. So when you hear me talk about exhaustion risk, usually in bullish conditions, it just means that buyers are getting exhausted because the move becomes overextended. Experienced traders start to close their positions ahead of what can be and usually is a massive pullback. Experienced traders are exiting positions. It causes more supply being put back into the market, and the retail buyers chasing price become less and less aggressive, so you get a massive down close candle. Retail buyers just do not have what it takes to prop up the overextended price. This also occurs in bearish conditions. In an overextended downside market, the experienced traders are exiting their short positions ahead of the yearly open, causing more demand to come back into the market. As to close a short position, you have to buy back in, and that will cause what appears to be more demand. This is also known as a dead cat bounce, although I hate that term because I love my cats. So this big move we are seeing started as that, coupled together with a bullish news event, the B Words podcast with Cathie Wood from Mark Investments, Elon Musk and Jack Dorsey of Twitter. We are seeing bullish continuation from all of this. So naturally the FOMO begins and retail starts chasing price all over again. Since July the 21st, we have not seen a down close day. We are 11 days from the event and we just closed above a key daily resistance level that we have been watching at $40,623.33, as well as last month's high of $41,322. Today is the monthly close. So we can see a pullback down to either one of those two prices, or it can also just keep moving up. However, we will not be chasing price. We will wait for a lower high support to be formed, where we then can take a bullish position, looking for a bit of continuation to the upside. We do not have any daily levels to target for our bullish positions until $49,498. So what we do here at Trade Talk is we drop down to our next favorite time frame, the 8-hour. So you can see, instead of trying to target a price that is very far away and less likely or probable to happen, we drop down in time to find price levels closer to current price, so that way we can target those areas, and that alone will make you have a higher probable chance of taking a successful position. Once you find an area you want to enter, you must already have a stop and target, or you're just trading blind and gambling. Also, your trade needs to be in the realm of reality. You can't have a $1 stop and expect a $50,000 target. So once we have confirmed support for at least a session or two or longer, we will be looking for targets relative to where current price is. And the 8-hour time frame gives us those targets. First level of possible resistance is going to be $45,204. This level there. and the next one is going to be $49,498. Those will be areas where we will exit 2/3 of our position, moves our stops to break even, ensuring that our original risk has left the building, and this gives you more ease to then sit in the position if bullish continuation occurs. As of now, we have no reason to expect near-term bearishness because of the technicals. I do realize and see that Bitcoin has been in a downtrend since the all-time high of 64,899 was put in, but the near term has been very bullish for the last 10 days, and it does and can provide sellers with an opportunity to exit their positions, and also gives new short sellers an opportunity to reload up with short side positions. But the technicals look okay. We have breached and closed above the 200 EMA, as well as hit overbought territory on the RSI. So naturally, I would love to see that chill out a bit, cool down, maybe give us a 50 test on the RSI, to then look for areas in price to look for bullish entries. Make sure you find key daily levels to base entries on, and do not take longs based solely on the RSI or moving averages. This will help your overall position to be more probable. If we get stopped out, then we will know we were wrong, and thus also making you only lose one position instead of FOMOing in up here or worse a little higher to then just be stopped out. Being a successful trader means waiting for that perfect spot to get long, the perfect setup if you will, and right now that just is not the case. So in closing, thank you so much for your time. I must reiterate, please like and subscribe if you haven't already, and make sure you trade safe, trade smart, and happy trading, everybody.